Fractional reserve banking. The system's so ingenious it could only have been dreamt up by folks who wear cufflinks to bed. It's the financial equivalent of making 10 cups of coffee with one bean. Except instead of coffee, it's money. And instead of tasting watery and disappointing, it risks sending the entire economy into a tailspin. But hey, at least someone's getting rich, right? Here's the gist. Banks, those benevolent institutions entrusted with your hard-earned cash, are only required to keep a tiny fraction of your deposits on hand. The rest, well, they get to lend it out and make a tidy profit. It's like lending your neighbor your lawnmower and charging them for the privilege, except on a much grander, more economy-warping scale. This magical process, known as money creation, effectively inflates the money supply. The original deposit, through the magic of lending and relending, multiplies faster than rabbits on a sugar rush. But hold your horses, because like any good magic trick, there's a catch. This constant expansion of the money supply can lead to some, shall we say, unforeseen consequences. Remember the housing bubble or the dot-com boom and bust? Yeah, those weren't just random acts of economic chaos. They were fueled, at least in part, by the wonders of fractional reserve banking and its penchant for creating asset bubbles. The problem is when everyone's swimming in easy money, things tend to get a little bubbly. Prices inflate, investments get riskier, and everyone starts believing they're Warren Buffett. Until, of course, the bubble bursts and we're all left picking up the pieces. Your money, their playground. So where does this leave the average Joe, you ask? Well, imagine going to the casino and realizing the house doesn't just have an edge, it practically owns the roulette wheel, the cards, and even the air you breathe. That's kind of what it's like navigating the world of fractional reserve banking. Your money, safely tucked away in your savings account, isn't just sitting there idly. It's being loaned out, invested, and generally thrown around like confetti at a banker's birthday party. And while you might get a measly couple of % interest for your troubles at best, the banks, they're raking it in. Bankers, masters of illusion. Let's give credit where credit's due. These financial wizards have truly outdone themselves. They've managed to convince the world that creating money out of thin air is not only possible, but also perfectly safe and normal. They've turned debt into an asset, risk into profit, and the global economy into their own personal monopoly board. And the best part, when their little magic trick backfires, as it inevitably does, who do you think gets called in to clean up the mess? That's right, the very same people who were busy racking up the chips while the roulette wheel was spinning.